Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the most voted tickers by Chart Guys members to cover, and most of them are some runaway bulls. So we obviously need to know what's going on in the S&P 500. A little bit of a slowdown the past few days, not necessarily seeing the bears take over, but always conscious and watching for the weekly lower high to be set. So what we're looking at on Tesla is the pattern of a higher low every single day, 8 days in a row now. So the bulls got continuation today. They keep getting upgrades. They keep getting positive coverage on CNBC. But we know that pattern's going to break eventually, and we're going to see daily consolidation. So right now we have a base of support at 710 and 702. It's on the hourly. 710, 702.77. And it's looking like a head and shoulders to me, with our left shoulder, our head, and a little bit of a right shoulder forming at the end of the day, but we ran out of time when the bell rang. So tomorrow, I'm going to be scouting for a Tesla short. Doesn't mean I'm going to go short Tesla. It means I'm scouting for it. So I need to see a proper risk to reward setup for an entry that I like. For example, let's say tomorrow the bell rings and we're trading at 715. I may wait, and if we break 710, I will go bearish. And then I would need to see a break of 700 to be convinced that I'm going to see significant follow through. If we were to open at 723, I may top fish 737 resistance, looking for that to be an hourly lower high, and then hoping we roll over. It depends on what the S&P 500 is doing as well, because that's going to have some notable correlation. But to keep it very simple, if we break 710 tomorrow, we break the pattern of a higher low every day, and we start consolidation. After 692 support is gap fill territory down to 652, and there's a lack of support there. So any bear is going to really hope that level breaks so we can start working through this area with a lack of support. If I want to be looking for a daily higher low to form for a bullish entry, I'm going to be watching hourly RSI, because when hourly RSI hits oversold for the first time after a massive bull run, we generally get a very solid bounce, and that's also a good time to be scouting for the potential of a daily higher low to form. So if I'm looking bearish and we are pulling back and we break the pattern of a higher low every day, I'm going to be watching what the RSI is as well. And if I were short, and hopefully it was a nice successful trade and we dropped 5% and I'm up big, I would cover that short into hourly oversold conditions. We'll take it one step at a time and see where we set up pre-market with both Tesla and SPY. Shot bulls, strong close, but still a double top at 500. Failed to break the high of yesterday by $1, but still keeping control. Again, same thing, higher low every day, 8 days in a row. If the bulls hold 477 tomorrow, that pattern remains intact. Have to see a convincing break over 501.47. From there, we look to 514 as the next resistance level. And as far as the hourly chart goes, also getting a little bit toppy, but still holding on. Still holding these higher lows. Higher low of 476.49. We held it by just over $1 at the low of today. Higher low in the afternoon, 486.75. If I want to be an aggressive bear, I can go bearish on the loss of the hourly uptrend. If I want to be a more patient bear, I'm waiting for a loss of the higher low everyday pattern, because we could lose the hourly uptrend yet still hold the higher low everyday pattern. Netflix, blue sky breakout, significant continuation. Hourly time frame, clear uptrend remains intact. Topping out here, just a wall at 434, 435 for 4 hours. That is a very clear resistance level now. We had 424.74 as a double blow. Look at the 15-minute time frame. If we had more time left in the day, I'd be watching for a 15-minute head and shoulders here. If we bounced off that support. But overall, I can either top fish resistance, which would have a high probability of getting stopped out because the hourly uptrend is still intact, but the risk would be small if I have a nice tight stop. Or I can wait for a loss of the hourly uptrend. I could wait for a loss of the higher low everyday pattern. But overall, the bulls still have full control. So we know consolidation on these high flyers is coming sooner rather than later, especially with earnings approaching. And earnings, I believe, are the 21st. I have to double check that date. But that would be next Tuesday, which means 3 more trading days. The harder you run into earnings, the more likely you're going to see profit taking right before earnings come out. The harder you dump into earnings, the more likely you're going to see a bounce before earnings come out, because the bulls are going to look to lock in some profit before the unknown event of the earnings reaction. And likewise, it would be the bears locking in profit if we were pulling back. So bulls still in complete control. My ideal scenario, I'd love to see another solid green day, get as extended as possible, and then the closer we get towards earnings, I know the more likely we're going to see profit taking in a pullback. SPCE, bulls keeping complete control, high or low every day the last 7 days. 2107 resistance, followed by 2112 from March 10th, and then 2328 after that. Hourly uptrend is our short-term guide, which is staying in control. And let's see, we had support of 1813. That level did break today. So how I draw this is with extended hours off makes it more clear for me. Hourly high or low is 1762. Anything over 1762 is an hourly high or low. So it's a kind of scenario with this current setup. If we were to pull back and drop pretty hard down towards the low 18s, I would look for a bounce and for the hourly uptrend to remain. But because of the size of that pullback, I would also then look for a lower high compared to the top of the move 2107. If the bulls just break 2107 tomorrow, hourly uptrend remains intact, and that wouldn't be a setup. But bottom line is the bulls have a good amount of space to maintain the hourly uptrend, even if we see red first thing tomorrow morning. So the hourly uptrend is going to be our short-term guide, and when the hourly uptrend is lost on any of the names that we just looked at, we are just looking for a daily high or low because they all have tons of space for a daily high or low to form. BA is a great equilibrium to be watching into next week. Low of the dump, high of the bounce, high or low, low or high. We were looking for a higher low compared to 120. Have we changed the hourly trend? No. So that has to happen before we're confident. It's looking like our daily high or low is being set here at 132.90. But I need to see, hold the low of today, break the high of today to confirm the hourly trend change to give us the daily high or low. From there, I would be watching for a lower high compared to 164.80 and a break sometime mid to later next week. And that is one worth watching. There's some really nice equilibrium shaping up. F is another one off the top of my head. Could take a lot longer to play out. We're looking for a higher low compared to 417. But names that have these equilibriums are going to be nice into later April. Have a good day. I didn't do much trading today. So yesterday I was trading very actively. I was in the zone. Took 9 trades with a lot of orders, a lot more than 9 orders as I'm scaling in, scaling out. I went 6 for 6 with 3 break-even stop-outs. Most of it was Tesla, a little bit of oil, break-even on SPY. Today, I was looking for a setup in the S&P 500 that I wanted to be comfortable in. I wanted to see a bounce first thing in the morning and then be scouting for an hourly lower high into midday. We putted around and we were very choppy all morning. And that just told me, hands off. If I took 9 trades today, I would have given back a lot of my profit from yesterday. Instead, I took 2 trades today. I had a very small win on RCL and a very small loss on a SPY short. Pretty much went break even today. My account maybe fluctuated by less than 0.1% from closed positions from yesterday into today. So the point is, we as traders have the ultimate power. We choose when we play this game. We can wait till scenarios are the most common. I use examples where if I'm a marathon runner, I don't choose when the marathon is. That's the day of the marathon. If I've got the flu, I'm not going to perform well. Or if I'm a plant, I'm planting tomatoes, I can take the plant inside when it's cold weather and then just stick it right back outside again when it's warm weather. That's the way we need to be treating trading, because in that scenario, we keep the odds in our favor the most. So in the end today, I gave back maybe 1 to 2% of yesterday's locked in profit because I put my foot on the brakes, recognizing this is not the setup that I'm most comfortable with. And that's also a point in favor of having multiple streams of income. Because if I'm sitting here stressing about paying my bills with my trading gains, I'm going to force trades. It's much easier for me to say hands off, knowing I don't have to make money today. Whereas if I'm feeling like I got to make money today to pay my bills, I better find some good trades. In my opinion, that causes a lot of forced trades and a lot of red trades. So take power into your hands that we are given in this game to choose the most likely scenarios. Over trading is where a lot of newer traders get chopped up. Have a good day. See you tomorrow. Do good things. So in this bed, I did transplants of kale and chard and collard greens for the first generation to be older, and those will be ready first, and then have a bit of succession planting with direct seeded coming up behind them. I'm leaving these this thick because there are flea beetles that are taking a bite out of all of them. So I sprayed neem oil all over it, which is a, what is it? Not an insecticide, it is a neurotoxin for insects. So they eat it and they forget to eat and they forget to mate, and that helps prevent from further generations continuing to eat it. And I'm leaving it this thick, so pretty much it's going to outpace being eaten, and the biggest and strongest ones that are the less eaten are the ones that I will keep, and I'll thin everything else out and have a second generation of these greens here. This kale is still going. This is kale from last year that overwintered. Got some dill sprouts coming up and some cilantro over there. This is arugula that's flowering pretty soon. I'll pull out all this arugula and make space for basil. These are some multicolored spinach, which I've never grown before, but they're certainly interesting. Bunch of lettuce, thinning that as they get bigger as well, and just eating the fairly big seedlings, but there's too many. And this is the bigger lettuce and the bigger spinach. About time to start having daily salads. Plum trees settling in nicely. I think that's going to be a good spot for it.